Hey, what's going on, everybody? So I wanted to come on early. We have PPI coming in about 1 minute, but let me explain. PPI is similar to CPI, meaning if the number comes in cool or less than expected, the markets will like that and they will be bullish. If the PPI number comes in hot, same as CPI, the markets will not like that and the markets will go down. So what did we see before we saw CPI on Wednesday? We saw the markets take a tumble in assumption that PPI was going to be, that CPI was going to be hot. So what did we see yesterday? Again, end of day, we saw the markets took a bit of a tumble in anticipation that PPI could be hot. Now, what are they doing? Futures, after hours, pre-market. They're buying up every dip in every stock, even the small cap tech stocks like Russell 2000, all those mini stocks are going up ridiculously much. Understand, we're about 2% away from a bull run. No longer a bear market, 2% away. If the Dow goes up 2%, we're in bull territory, which I personally don't agree because most of the world is going into recession. And I'm going to mention China because Chinese stocks had a great day. But I think we have the PPI numbers coming in right now.
We're going to show you that we're in the green after a couple of earnings reports coming in. 208 on the Dow up. NASDAQ going to open about 197, but 198 points higher. And the S&P 500 up about 44 points higher. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, sir.
Well, let's start out with Empire. Empire's November number expecting -6, much better than expected. Up 4.5, up 4.5, up 4.5 actually is the first positive number since July. And in July, it was well above. It was 11.1. So that's nice. Here we go.
Really good for the market.
October read on Producer Price Index month over month, up 0.2%, half of what was expected. Remember, the high water mark for all the metrics I'm about to give was in March of this year. High water mark there, 1.7%. Now, if we look at X-Food and Energy, zero. We're expecting up 0.30. And this, by far, is maybe one of the bigger surprises. Up 1.3 in March was the high water mark. If you strip out on a monthly basis, food, energy, now one more trade, it's up 0.2. We're expecting up 0.3. High water mark there in March was up 1%. All right, the year-over-year numbers, in my opinion, the most important. Year-over-year headline up 8%. That is 0.3 less than the 8.3 we were expecting. It's a 0.5% less than the 8.5 in the rearview mirror, and 11.7 was the high water mark. Strip off food and energy, it's up 6.7%. That's a 0.5% below expectations. It's a 0.5% below our last look at 7.2, and it's well under 9.7%. 3 percentage points was a high water mark in March. And finally, the last year-over-year X-Food, X-Trade, and X-Energy up 5.4%. We're expecting up 5.6 in the rearview mirror, 5.6. 5.4, of course, high water mark there was 7.1. We are seeing some light revisions trickle in. I should highlight them. On the headline number, up 0.4 last month, now gets cut in half to up 0.2, which really, in a way, shouldn't take anything away from this month. It should just spread it out more aggressively. If we take core, it was up 0.3. It's now only up 0.2. The rest of the revisions aren't that big a deal, actually. And if we look at what's going on with regard to yields, well, we're at 377, approaching 3 3/4 on a 10-year. It's now down 8 basis points. It's at a 1.5-month low. Should it close here? And as we look at the dollar index, which continues to fall, it is basically at a 3-month low if it was to close here. And it is on the move as we speak. These yields should drop. And anybody who's making the case, hold on, this doesn't mean the Fed's going to change course, doesn't mean the Fed's going to pivot. You know what? There is a world outside the Fed, and there are a world of facts that are probably outside the Fed's mind because nobody knows the future. In the end, it's about what was priced into the markets, what now is being repriced into the markets. And the fact that on CPI last week, we ended up with one of the strongest stock rallies in history isn't lost on investors who seem to be lining up today to have a repeat performance. Andrew.
Okay, Rick, stay with us.
Sweet. Okay, so let me tell you what I heard, and then we're going to talk about some world news, and then we're going to talk about the SPY and what could potentially happen today. And if you have stocks you want me to look at, mention them on the sidelines. Be like, hey, can you take a look at Apple? We will pull up the chart. We'll look together, because Apple does have rejection at like possibly 157. If it breaks 157, you could see 165. And yes, Apple's at 150. I'm giving you a bull case scenario. Okay, so let me break down what we heard from the PPI numbers. They basically came in flat, in line, or a little cool. Year over year, still at 8% is kind of high. I understand the high watermark is 11%, but I mean, we're talking about year over year. Well, that's what inflation, that's what the judge is. So I don't expect the markets to rip, although we've seen what happens on the sidelines. So we saw CPI come in light last Wednesday, right? The markets ripped on Thursday, Friday. We had a bit of consolidation. There was selling into the end of day in anticipation of PPI this morning, which came in flat or cool. So what should the markets do? Well, we had buying on Thursday, buying on Friday. We had buying yesterday until we had that sell-off, lighter volume during that sell-off, and it was very late in the day, probably in anticipation of PPI numbers. Now PPI numbers, if they came in flat, or even I'd say, okay, choppiness in the market today, they came in so cool. I'm kind of disappointed, because we're going to enter a bull scenario for the market today. And I personally disagree. Again, I'm not holding many positions and I day trade, but when you disagree with the market's direction, it makes it much more difficult to trade, because you're anticipating the market to drop, or you're saying all these influences are on the market, yet the market keeps pushing higher. So again, don't fight the trend. We're going to talk about some certain stocks, but let's talk about some earnings that came out, okay? Walmart earnings, they beat both on the top and bottom lines. They maintained their quarter four guidance, so they didn't increase it, but because they beat, their guidance goes up, because they beat in the third quarter. So now it's assuming the fourth quarter they'll run flat like they said, which is still increase in full year guidance. Then we have China. Now the Chinese market was off the hook yet again. You've heard me mention this a couple of days straight. And when you look at pre-market, you're looking at Alibaba, you're looking at Baidu. You could probably look at NIO, which I haven't done yet. But I saw Alibaba was up like 10%. Understand this. COVID cases are running wild in China right now, and they're probably going to do lockdowns. They say they're going to lessen that. But again, I just don't trust China. So that's another thing impacting our market. I know the Chinese market is struggling. I know the Chinese economy is struggling. If they start lockdowns, and we're only in November, if they start lockdowns from November, December, January, February, March, their economy is going to be extremely hurting. We are China's biggest trade partner. Just because our economy seems to be holding its own according to the Fed and other analysts, and we're potentially in a bull run, you have to look at the rest of the world. In Somalia, not a huge economic country, but there's famine right now. They can't feed themselves. They don't have the water. They don't have the food. We have the war in Ukraine. We have everything else that's going in Europe, right? They need gas, energy, because it's going to be a cold winter for them. But nobody seems to care. Everything seems to be based on earnings and CPI and PPI. And if the market wants to push higher, I'm not going to fight it, okay? We'll talk about Warren Buffett, right? Old man, let's see what stocks he went into. What did he go into? He went into, where is it? I thought I had it up here. I have them the wrong thing. Okay, let's just go here. Because it's interesting, when people take stakes in stocks like he does, all right, Paramount Global, which I did a YouTube video on probably 3 months ago, and I said, streaming, this is where I would be. Then some analysts came out and they said, Paramount Global should be $12. And Paramount Global went all the way down to like $13. Who's buying Paramount Global? Understand, Paramount Global is NBC, right? Channel 4, the Peacock, that's Paramount. Who else is he buying? Taiwan Semiconductors, up 11% overnight. Paramount Global, up 9% overnight, right? TDOC, it's up 4.6%. Starbucks has been off the hook. AMD up another 5% pre-market. SPY is up 2%. TQQQ up 9% pre-market. Rivian 2.76. Plug 4.5. Apple almost 3%. So Apple's at 152.56. Understand, rejection on Apple could be another 4 points higher. So if you look at Apple and you say 4 points higher, that's another 3%. If Apple is currently up 2.5% or 2.8% today, could it potentially run 5%? Yes. Am I going to be risking my money to get on Apple calls if I think Apple could potentially go up? No, because I just don't trust this market. So similar to yesterday, where I spent most of the day on the side, and yesterday, if you remember pre-market, I came on and I said 400 for the top of the SPY, and the bottom should be about 393. Well, what did we see? 400 for the top, 394 and change for the bottom. I missed by $1. The point is, my trading strategy would have been suffering most of the day because the market was stepping higher. And I'm like, I expected 393. But at the end of the day, where did the market go? 394 and change. So you have strategy. You just have to show patience. I mentioned this yesterday. Patience, patience, patience. Now, here's what I have to do better. And then we're going to talk about the SPY. What I have to do better is I have to drown out all that other side information like China, the war, other things that are reality, the fact that rent prices are going up, the fact that there are layoffs coming and that we have a holiday season, and the fact that people's credit card debts are through the roof. I'm going to assume all that doesn't exist anymore, and I'm just going to trade the market today. If the market is telling me it wants to push higher, I will get on and I will push higher, but I will make sure to secure profit. So let's talk about SPY and where the SPY could go, because yesterday's prediction was pretty accurate. 400 on the top side, 393 I said on the bottom side. We were 394. The SPY pre-market is pumping off some good volume. It's at, oh shoot, that's Apple. Sorry. You know what? We'll pull up the SPY in a second. All right, so the SPY is up like 2% pre-market, 402 and change. Let's just see if we can pull it up. All right, let's streamline. All right, add it to the stream. Okay, there we go. Perfect, perfect, perfect. Okay, so I got the SPY up here. Now you're going to have to listen because I'm not watching myself. I'm just going to go back to the 1 hour chart, which gives us a little more than a day. We could see the drop off here when we had the day before we had CPI numbers. So where were we before? 388. Okay, where did we gap up to? 388. So where's likely? Obviously, we have support at 388, but let's zoom in. Let's go to the 5-minute chart. Let's look at yesterday and the day before. We had a bit of a sell-off right here to 396. So if I'm going to guess the low for today, I'm going to say right at 397, okay? Which is tough because we're at 402 right now. So again, my prediction would be 397 on the low end, and I would say probably 405 on the high end. And if I was going to expect a pattern, then I would expect a pattern like this. And I'm going to draw it out for you. Okay. Now, what do we see yesterday? Same thing as yesterday, right? Little dip at open, and that was pretty quick. Came up to this point. Then the market decided to push higher, and then sold off. So again, I'm expecting a similar chart, which is dangerous because if you want to get into puts, you're losing money as you enter. So it's mostly about patience until you're finally right, if you're right. Now, if the market steps up even higher, you'll be wrong. So again, the main part of my strategy today and every day is I start out and I warn myself, caution. You don't want to over leverage yourself. You don't want to guess in the market. Now, for some of you who've seen my video where I talk about trading like you have a knife or a gun held to your head, people laughed about that, okay? But let me explain that theory. You're trading and someone says to you, if you're wrong about this trade that you're about to enter into, we're going to stab you. We're going to shoot you. Would you still enter that trade? Me? No. Half the time I'd be like, no, please. No, I don't like that trade this much. Push it to the side. But sometimes I use emotion and I enter that trade anyway. So what I'm suggesting to you is make sure you have a complete strategy. I'm buying this option at $1, right? I believe it's going up to $2 because I could see the stock going up for this purpose because there's inflow, there's demand, and we're in a bull market. Now, if the SPY goes up to 405 and rejects 405 or whatever number the SPY rejects at, you're not looking at calls when the top of the market is in and there's always some resistance. If you're looking at calls at the top, you're going to screw yourself. So I'm not saying to look at puts. I'm just saying it's all about entry. Now, what I've taught lately is the nibble. The nibble means I technically miss on my journal, on my spreadsheets, when I call entry into a position and I pay $2 a contract, I generally miss by about 18%. Meaning after I pay $2, it might go up to 220, 210, then it goes to 190, 180, and at some point it goes to about 172, 174. I missed by about 18%. So what does that tell me? It tells me don't trade with emotion. The next time you're going to buy that contract for $2, Matt, just put in for 172. If you get it, great. Now, I've told myself that before. And when I'm anxious and I'm like, oh, sorry, I had FOMO, I had to get that contract. What happens later in the day? It always crosses that point, and then I always finish green. Okay. So again, you want to improve your technique when it comes to trading. All right. So we're going to go over SPY ranges. SPY is sitting at 402.29 right now. It's up 1.18%. Understand, if I was going to guess on the upside, I would say the SPY could potentially go up 3.5% today. So if I was going to go up 3.5%, we'd go to, or 3.5, maybe 3% would be a strong day. 3% would be another, 4.5, maybe 406 on the top end. So I'm going to reevaluate. I'm going to say, and I'll write it down here, and if I'm right, we'll see. 406 on the top end. And it's tough. You don't want to call the top. And if the SPY is sitting at 402, and I think 406 is a possibility, why wouldn't I be bullish? Because I don't trust this market. Just because we got a little information on CPI, PPI, it doesn't change what the Fed's going to do. Rates dropped substantially, but we've seen rates crater, meaning we've seen the 2-year drop and then spike back up. So for me, for safety, I might want to wait a couple of days. And it sucks because we're all day traders. We're all looking to claim victory. We all want to be winners. We all want to make money on any given day. But again, I would rather be patient. I'd rather be like, great, I waited till 2 o'clock. Here's the perfect entry. Great, I traded from 2 to 3 o'clock. I'm done trading, and that's it. Okay, so 406 on the high side. I still think we're going under 400 on the low side. Maybe 398, something to that extent. 406 on the high, 398 on the low. 8-point range, pretty significant. I don't see us going wider than that, so that's kind of what I'm looking for. Please let me know if you guys have any stocks or questions on the side. I'd love to try and answer that. Now, again, my strategy, see, I would love to be a gambler in this market and say, okay, well, I think the market spiked too hard off these numbers pre-market, and I would love to say puts, but you know what that would do? That would be exactly that, gambling. Yes, I could be one of those guys like, yes, I knew the market was going down. I told people in the live stream puts, and we all crushed it. But the truth is, it would be extremely risky. So when I keep saying patience, be risk adverse, you have to understand your strategy. Now, if your strategy is I have $2,000 and I need to make 20,000, then yes, you want to enter 0 days till expiration. If your strategy is I have 20 or 40 or 10,000 and I'd like to make $1,000 today, then your strategy is patience. I'm waiting for an A+ entry. I don't like to trade before 10:30 a.m. because the bids and the asks are too wide. Now, if you want to carry over position overnight and take a play, let's say last night, because you thought just like CPI, PPI was going to come in light and the markets were going to spike, then that's a trading strategy as well. You're not trading until 3:50 p.m. and 3:50 or 3:55 yesterday, right as the market crashed, would have been the perfect time to get into calls with a strategy like that. So again, I'm not here to tell everybody what strategy to take. I'm telling you on the top side of the market, I could definitely see it going to like 405, 406. I would not jump on that because I'm not a bull. I still see what's going on, and that's trading with emotion. However, if I want to buy puts, I'm not going to fight the market out of the gate. Like the gate opens, horses are out of the gate. I'm not going to fight because as we saw yesterday, dip, spike, and then it was steps higher. Step higher is a strong market. So if we zoom out, yes, I could say Thursday they were buying. Friday they were buying. Monday they were buying the dip until they sold off in the afternoon in expectation of PPI. But what are they doing pre-market? They're buying. So yeah, and I explained this yesterday, or I mentioned it. I said that if you work for a hedge fund, if you work for an institution or a bank, you get fired from your job if you miss the bull run. If you're a bullish trader and you miss the run going north and these stocks are up 10, 20% and you're in cash, you will get fired. You do not get fired if you're in a stock and it goes down and it goes down because that's part of your plan. All right, so let's see what questions we have. Oh, thoughts on Chewy. So I don't have any thoughts on Chewy. I'll look at the chart real quick. Now, Romeo on our platform, who does his live stream, which his live stream is coming on at 9:15 this morning. He said he was going to go from 9:15 to about 10:15. So if you're watching me and you're not part of our Discord, you can join, okay? Join the Discord. 7 days for free. You verify yourself. If you still can't see the rooms, log out of Discord, log into Discord. Point is, Romeo does this. It's going to be free. I think he's going to do another one tomorrow. His calls have been on fire. So I mentioned that with Chewy because he's like my Chewy king. I mean, I can see them selling, but I believe Chewy's a very heavily shorted stock. Chewy has a market cap of $18 billion. They don't have earnings. they lose money, and yet the chart looks ridiculous higher. Same with AMD and things like that, because I see a question on NVIDIA earnings. So here's the question, or here's the thought on NVIDIA earnings, okay? And we'll put all chips together, okay? Taiwan Semiconductor, Warren Buffett just mentioned he took a position in, okay? AMD is up 5% pre-market, and we saw it hit a low of like 58, and I've heard it can run all the way to like 95 or something like that. I heard that from an analyst friend of mine on Wall Street. So that's bullish. NVIDIA has earnings, and they're number one in the chip sector, meaning they're going to lead the chip sector. So Micron will follow, STX will follow. Now, here's the thing. I expect earnings to be difficult. I expect supply chain to have issues. I expect them to mention all of these things and lower guidance. However, there is so much big money going into NVIDIA right now that has a counter to my prediction. You know what? Let me see if I can add Discord, because let me show you guys. Let me just see if I can add that. Add to stream. Let me see. Stop sharing, present. And I'm going to show you what NVIDIA has right now. So share screen, right? Let's go into Discord. Okay. Let's make sure you all can see it. All right. No, got to add it. There you go. Okay. So let's look at Discord. Let's go and we'll look at the algorithms for NVIDIA. So we're going to go here, and here are the flow and algos. And then we're going to type it in. So we'll do TR, and we'll look at the algo flow for NVIDIA. And we'll let it pull up, and I'll make it nice and big. Here it is. Okay. So hopefully you all can see that. You can. Let's make it even bigger. All right. So here's NVIDIA. Let me explain what you're seeing on your screen right here. This yellow line indicates the stock price. Okay. So the stock price was as high as 165. It hit a ceiling. It's back down. It looks like it's going to recover here. However, the algos, which are the algorithms, which are the computer-driven trades, are telling you the stock should be closer to 160. So what generally happens is, as you can see, the lines tend to intersect. Here, they follow each other. Okay, people started being bearish right around here where I'm circling, okay? But the price still going up, right? Then you can see the huge drop-off, probably getting ready for earnings. So again, the algorithm is telling me I should be bearish on NVIDIA. However, big money is telling me, holy moly, I better be careful, because big money is buying up every chip company, including AMD, Micron, STX, et cetera, et cetera. Okay, I see one other question. Looking at Wynn Casino, which is interesting. You know, Wynn doesn't have the crazy volume when it comes to options. So when you get into Wynn Casino, okay, what would be a good number to swing for tomorrow's SPY? Okay, I'll give you a bull case scenario and a bear case scenario. Okay, bull case scenario is Thursday, Friday, they were buying the market. Yesterday, they were buying the dips. Today, pre-market, the market's up. Only 1% of the action happens pre-market, so the market's going to get even stronger. And the SPY will go up to 407, 408. Best case scenario, if the markets get bought up for 2 days in a row, 412, 413 on the SPY. Now, again, do I think that's going to happen? No, because of all the other shit that's going on in the world. However, if we're just focusing on the market and the activity and the bullishness in the market, then yeah, it seems like a possibility. That's why I have to say it. However, I would look to see if the SPY rejects. I haven't spoken about these levels. If the SPY is bullish, which it is, and we're at 401, 402 this morning, I'm going to look to see at 405. At 405, it should reject. If it breaks 405, 409 is the next way up. So if it breaks 405, you guys should be, whatever you're in, Roblox, Lucid, Tesla, you'd be like, okay, well, 409 is coming. I'm going to hold on to my calls. If it rejects 405, and then you could see 401 back incoming where we were pre-market, right? Where we were before the numbers came out. Even before the numbers came out, we were less than that. So again, I say we still see some choppiness. I don't think the numbers were that great where the Fed takes a step backwards, and the Fed takes a step backwards and says, okay, you know, December rates, we're only going to raise it 25 basis points. Now, understand, the 2-year note, which was at 4.70%, is at 4.33 this morning, down a few more basis points. The 10-year, which is pressing 4.50%, is now at like 3.75%, down 75 basis points in like a month. So whereas you say, why has the market been bullish, Matt, with all this other BS going on? Exactly that, because our rates are going down and it makes it cheaper to borrow money to invest in our markets. Understand, when I mention big money, a lot of the big money in the markets is borrowed. It's levered, meaning as things go up, it's almost like playing options versus stocks. Your return is 1,000 times better if you're correct. So the same is true when they're borrowing this money, they're putting it in on a certain place. That's why you're seeing extreme volatility. When we're in a bear market, you can see the markets tank really quickly. Money's being pulled back. We're in a bull run now. All you can see is extra people putting money. Oh, the market went up 5% yesterday. I don't care. It's going higher. Let me put more money in. That's what the premise is right now. And to me, that is almost like retail investing. It's like just shoving because everybody's doing it and everybody's making money. And that's not really investing. Investing is picking out certain plays, looking for support, looking for resistance, and things of that nature. All right, everybody. Last question, and then I've got to run. So please find me on Discord. All right, so what am I looking at? When was a great buy? $54. Now it's $24 higher, $24.54. It's up 45% in the last month. Actually, it's up 37% in the last month. So can Wynn go higher? Yes, but it's like Carnival Cruise Lines. I mean, the point is, you have to want to own the stock, and it has to be that important that you have to own the stock now to push it higher. So somebody would say, well, when's a $100 stock? I want to own as much as possible right now. That'll push it higher. But I put it in the same boat with airlines and cruise ships. There's not going to be this massive, massive demand like I have to get in today. And if I don't get in today, I'm screwed. So people are thinking that way with AMD, NVIDIA, Apple. Those are stocks that'll keep going higher and higher and higher and higher and higher. Whereas Wynn, once it peaks out, could go down. You have puts. I mean, you're fighting the market. You're fighting 2, 4, 6, 8, 10, 12. 12 out of the last 15 days for Wynn Casino have been inflow days. The Wynn Casino has gone up, and you're basically telling me you're calling the top. And unfortunately, you're calling the top in a market that wants to be more bullish. So unfortunately, I mean, things could change. But if you think the SPY is going to close over 400 today, remember we closed at 395 yesterday. So I'm not even saying we need to close at 402, 403, 407. If you think this SPY is closing at 400, I wouldn't be in the Wynn puts anymore. I mean, it's a dangerous thing. I don't know when your Wynn puts expire. If you're going out to January, there's a chance the stock's $100 by January if we're in a bull market. Okay, I see another question, ARDX. Well, we can pull that one up. ARDX. Sounds like a biotech company, something like that. Yeah, it's a dollar stock. I don't know this stock, okay? So what I'm showing you from my phone is there was huge outflow yesterday. There was probably news. And again, FDA signals unclear clinical benefits of their kidney disease. So again, what they are is they're a low cap, $236 million market cap. They have negative earnings. Biotech companies always need to raise more money. So what happened is FDA came out and said something. There was a huge sell-off. Maybe there was a sell-off into a spike. So let's just look at the 5-day. Yeah, it spiked on open. So it went from $1.20 to $1.70. It was up 50%. And by the end of the day, it was up less than 1%. So could this spike again? It could. I don't cover biotech companies, but these biotech companies make me weary because you might see it go from $1.26 all the way to like 90 cents before it spikes up again. So if you're in at $1.26 and it goes to 90 cents and you're like, holy shit, I'm off 31% before this spike, and you sell before this spike, and not all these companies spike. I used to follow a company called Trevena, TRVN, and it was like at $1.50, then it spiked up to $3, and it was down. I think it's like at 19 cents now. So understand the worst case scenario, and I got out like years ago, but the worst case scenario is you're following this when you keep holding the bag as it goes down. Let's remember a Bitcoin stock, SOS, right? SOS kept going down. Then they did a 50 for one reverse split. Okay, so go on to Discord, follow us there. It's right there. Join for 7 days. It's free. You verify yourself. There's no credit card information needed. You like the platform because you watch me or Romeo's live streams, or Love, who's a professor who teaches. She's just unbelievable, okay? I'll just leave it like that. Unbelievable. See you guys later.